Straddling tax years. What do I mean by that? Well, there are instances when you're selling the relinquished property in one tax year, like 2017, but you'll be buying your replacement property in a subsequent tax year, 2018. Does this present any complications or opportunities? Yes, it does. First, on the complication side. In a 1031 exchange, you have a 45-day identification period, but also a 180-day acquisition period. Actually, it's 180 days or the date your tax return is due, whichever comes first. Or, if you file your tax return, that's also considered the ending date. So if you closed on your relinquished property after October 17th of 2017, April 15th will come first. So please make sure and buy your replacement property before you file your tax return. This is particularly important for people in partnerships because your filing date, your deadline date, now is March 15th. So what are the potential opportunities? Well, let's say you're trying to decide whether or not to do a 1031 exchange because you're concerned you're not going to find any suitable replacement property. Let's say your relinquished closing is December 1st of 2017. If you go out and you look for property and you are unsuccessful, you're worried maybe you're tying up your cash for 45 days in a very ineffective manner. Well, actually, your 45 days will end somewhere around the middle of January, and at that point you'll have a failed exchange. Your proceeds will be then distributed to you from your exchange account, and you can decide if you're an all-cash seller. In other words, if at the relinquished closing there was no debt payoff, you can decide whether or not to recognize the gain in 2017 or 2018 under the installment sale rules. Your choice. So yes, there is a potential opportunity. Hope you find this helpful, and remember, we try to help you maximize the benefit of your 1031 exchange transactions.